Hello everybody and welcome. Today we're going to learn about a long call vertical, what it is and how to set it up. So the first thing to understand about a long call vertical is what we want to happen. A long call vertical means we want the stock price to go up. So in this case you can see the stock price has been going down, down, down for a couple months. So if we were a contrarian, we might say, hey, this thing has reached kind of like a low or a bottom, and we think from here there's a much better chance it's going to go up. And if we believe the stock price is going to go up, we're going to buy something called a long call vertical. So how do we set that up? So I've set it up for us already. We start right here. The stock price, as you can see, is 363 and change. In order to set up a long call vertical, what we do is we always buy a call below the stock price and then sell a call above the stock price. We always want the stock price to be between our two strike prices. And we can make this as wide or narrow as we like. Obviously $1 is as narrow as we can get, but we can absolutely make this $10 wide. We could make this 360, 370, however you want to do it, not important. The important process is, in order to create a long call vertical, again, we buy a call below the stock price and we sell a call above the stock price. And that creates a $1 wide call vertical. And whatever we pay for it is the most we can lose. And in this case, because it's $1 wide, what that means is max potential profit plus max potential loss always has to equal the width of the strikes. So if the strikes are $1 wide, which means 363 to 364, and we are paying 58 cents for this long call vertical, what is the most we can make? Well, it has to equal $1. So that's how we work it out. Because it's $1 width, max potential loss, which is what we pay for it, plus max potential profit has to equal $1. So if we're paying 58 cents for this, that means the most we can make is 42 cents. And that is what a long call vertical is and how we set them up.